All right, ladies and gentlemen, I got your watch list coming into October 3rd, 2019, and I think October has not disappointed us with the volatility. The Dow Jones dropped as much as 560 points today. We closed down 494 points. News came out after hours, right after hours, that Trump is putting on more tariffs on the EU. Now, relatively speaking, it's not that big. The market reacted, and it kind of bounced up a little bit here. We are chilling right where we closed, and now what we need to watch for coming into tomorrow morning is going to be the Asian stocks in Europe and seeing the global reaction to this. But the market has dropped over 1,000 points in the last few days. When you look at the round trip here on the daily, I'm going to turn off the VWAP here. This looks insane. This is a big drop. And if you guys have been watching the watch list, you guys are seeing a lot of the stuff we talked about. And yesterday's watch list was very important, and we're going to talk about this. But this drop is big. It's now bringing us back to these August levels, and this is relative to a lot of other factors we've seen, from the currencies to the bonds, and this is all stuff we need to be watching. But I'm pretty confident in what's causing this, and I talked about it on yesterday's watch list. We're going to talk about that, but I'm going to briefly discuss that. I want to talk about the keys for tomorrow and how to play this volatility for October. Hopefully you guys are feeling prepared and good. Some of the plays are hitting really, really well, utilizing this strategy. I'm very, very excited because I honestly think this is as clear as it's ever been as far as one of these volatile moments. Every single one of these moments, we've seen some indicators and stuff, but it's kind of been muddy. But now moving forward, I think this is crystal clear. Now I'm worried about that, and that's where you guys are here to source information and challenge this. Hopefully we could go back and forth and figure out what it is, but I'm very, very excited, and I want to share with you guys how to go about playing this. So we're going to cover those keys. We're going to talk about the plays we made tomorrow, and then we're going to talk about the plays for tomorrow, baby. So that's going to include some strategy, but before we do that, you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribing. Make sure you're there in the morning. We have all of this documented, you guys. So if you want to even watch today on this channel, there's a recap of everything that happened, a full 7-hour trading day. We are trading live every single day, Monday through Friday, 30 minutes before open. Hit the subscribe button. Make sure you got the bell so you don't miss it. And now the most important thing you need to do: post your watch list below. Let us know what you're playing, what you played today. Get this information. You got a bunch of watch lists here. Like, how do I make a watch list? It doesn't matter. Just post whatever you want. Just be positive, be respectful. That's all we need, baby. So let's get to it. Again, crazy move here. The news is going to be the tariffs, and what even caused this is what we said from yesterday. More surprising data. Now, what that data was 2 days ago, if you guys want to see what happened here, it started with the ISM numbers. This is what caused the big drop. Now we had a gap down and a further drop. We had employment. There was even a big downward revision, which was bad. And again, this stuff is bad. And tomorrow we are going to be getting ISM non-services, and now some people think that's going to be bad and abysmal. I think the services might do a little bit better, but we will see. But again, be careful of some of these moves. It doesn't have to keep coming down. You know, take a look at Baba and Baidu. They actually ended up, surprisingly. But now the big key that we talked about was the rate cuts. This is the main point that I was talking about. This was different. This was a bigger change than we've ever seen, and this is now changing the whole psychology of the market and what's going to happen for the Fed. I think that is going to be responsible for all of this. So watch this tomorrow. You'll notice there was a big change today. The more there's bigger changes here, and the more it stays at this 70-30 with the Fed futures pricing in a rate cut, this is what is dropping the market, my friend. This is at least my theory. So again, it's just like the TLT. I need to work through this. I think within the next few days, we're going to be able to match it up with the play that's really going to make sense. But this is what I'm pretty confident is causing this. But then again, confidence killed the cat, right? I think that's what they say in the Trader Handbook proverb, something like that. This is what I want to talk about. So this came up when I was discussing with the play, so I figured I'd put it here to give more evidence to what I'm saying with the Fed. This is what we said on September 17th before the Fed. We said it's not as much about what happens tomorrow for the Fed meeting versus how it's said and what it means for the next interest rate decision. So this was almost a month ago or 2 weeks ago. And I said the big plays won't happen tomorrow, but will develop over the next week. So I was about 1 week too early, but it's this play that we said. Bank of America, both sides. So again, we played it's how the market is going to move during this October. We're down 1,000 points in 2 days. Think round trip moves. It's because we did end up higher and then we come down and then higher and then come down. These full circle moves mean something, and it's the round trip day after day. So again, even today was 500-600 points. You guys might be like, okay, well that's bad, but we've seen worse. We've seen 1,000-point days. If that's what you're expecting and you're expecting it to resemble this August in these big moves, you're going to be in for a shock, because if October plays out like last October, that is what made last October unique. It wasn't like that. Last October was so deadly because it had a few big drops, then a big pump up, then a bigger drop, then a pump up, and then a big drop. It was big swings, and this kills the volatility. You have to understand the real killer was in December, but even then, it was smaller days. Some of you are expecting, I mean, this might be a very crude example, but some of you are expecting these big turds. You know, if you go to the bathroom, it's as if it's been held in for a long time, it's going to come out straight. No, when you got to be careful of these little pebbles, because when it comes in, it's still big days, 300, 400, 500 point days at a time. That is what adds up, but that's not going to reflect what you want if you're playing puts or in general, and that's what's going to throw the market, investor confidence, and liquidity really, really off. So keep that in mind. This is how October is going to be. Think iron condors. Why I say that, because you guys have even seen like Boeing. Remember, we made that play on Boeing. We have an iron condor on it, and surprisingly, we were down a lot on it. Now we're up on it, and then it was down and up. It's because iron condors, this stock can move up and down. It's where it oscillates and ends up. Think that just on a bigger scale now. And that's kind of what you saw here during October. And that's what made it unique and very different than some of these bigger drops we've seen. So watch out for that. But now think about this. If we do get a big move down, it's still going to be a walk down. And that still walk down's in effect where you're not seeing the velocity. And this is what I was saying with October. This is what made October so unique. It was a walk down by little bit, steps at a time, up and down, until December came along. So keep your eye out for that. It wasn't just straight down, Habibis. I want you guys in the game, because that's even what we did with the plays. You could even see been doing good with the spreads, and even today, you know, at the end of the day, we made like 150 here on the Robinhood. But if you remember, I bought Boeing puts, Bank of America puts, UVXYs, all that. We made $160 on those. So literally, you're seeing almost similar profits to even purchasing premium versus selling it, which is very counterintuitive, because some people would say, well, volatility, we're supposed to buy options. And yes, that's if there's big ass moves and it continuously goes down to the strike price you bought. But then if it goes down and then comes back up and then goes down and comes back up and then eventually comes down after killing 2 weeks, you're going to make money, but not as much. So this is what I want to make sure you guys' head is in the game for, so you guys can be wise about how to play this. And again, take it slow. We've been here before. If you guys are seeing the beauty with some of these strategies we're employing, like the spreads, we're taking our time. We're having a blast during all this, and we're not forcing it. And that's the key. Do not force and YOLO it. You guys take it slow. We got your back here. But watch all this stuff. Watch gold and silver now, because if we do start to see more moves, again, even as far as tomorrow, what do I expect? I don't know. I am preparing for a pop, though, of some sort. It's either going to happen tomorrow, later in the day, or it could be a cuck, or it could even be on Friday where we go down again and then pop by Friday. But anything could happen, and there's a lot more different things we need to watch. The best part is the strategy we're on is it's bearish neutral. So again, I could profit off of that. I have enough plays that we could make money on the downside, where guess what? All we have to do is start selling some put credit spreads. If it bounces, we pop up off those. If not, we'll make more money on it going down on the call spreads, and we could still make money even if it goes against us by not selling stuff too crazy and just collect little by little. But I've said this is a 3-step process. Some of you want to play this downside. This is not checkers, this is chess. That's what we called it, because it's not just, okay, market goes down, buy put. Okay, if you jump over the guy, you get his piece. No, you have to set it up. There's going to be a 3-step process I'm thinking of. Selling premium, catching the downside, which we're already in, selling premium a little bit on the bounce, and then taking that money and then funding it for the last final step to buy the option. So keep this in mind. And the next thing that's going to be important are also the key levels. If we butter the 286, 284, 283 and fall right through those, it brings us back here. You guys can see 286 down to 282. So if we break 283 and then go through those, that is going to be some bad stuff. And surprisingly, we broke key levels pretty easy today, but you're seeing it oscillate around here. Here's even the clip from the stream alerts. I was able to put this here around the first hour in. You can see the timestamp there. We were at 289 breaking that. And I said, if we do break 288.50 and it does start to eventually break there, it's going to be a bigger down day. And it's exactly what we saw. We were close to hitting 600, but we didn't. So this is even what's making me think we could have a bigger down day. And then there you could even see the other play. We're going to talk about that, the iron condor that we did. And that's even me taking advantage of the downside. But watch those key levels, and again, watch even the volume. Today was a big volume day, which is important. So Pay attention to all this. And lastly, again, I can't stress this enough because I think there's a lot of reasons. And again, do I think the impeachment factors into all of this? Yes, I do. I think that's the next big thing. But now what's happening is people are pricing in stuff. So what I mean is how they're pricing in the Fed, the psychological shift from a mid-cycle adjustment to now, if the economic data is bad and the market's expecting a cut, the Fed has not expected it, and we get that, and all of this other drama and liquidity, it's not looking good. People are starting to price in this stuff. That's why there's people exiting. That's why prices are changing. It's not because of trade war and this and that. Surprisingly, it's people pricing in that stuff as well as other risks. So keep that in mind. And then not to mention, there's just an infamous liquidity crunch at the beginning of quarter four, at the end of that last quarter of Q3 coming into Q4, which we already saw. And then even towards the end of Q4, we're going to see this is a time where there's a lack of liquidity, if anything. So get ready. But again, this doesn't mean panic or anything like that. So I'm saying this so you guys could understand the movements and set up, again, the strategy of how to play this move, of how it's going to oscillate and what to watch. And really, so you guys have your lens on in the right way to know what to focus on and what not to focus on, and don't hyper-focus on certain aspects. But let us get into the play. So right off the bat, you guys can see I did an Apple Iron Condor. This is one of the plays I made for Friday. I could be premature, but I kind of liked it. But I do want to find another play for tomorrow because tomorrow's going to be Thursday. So now this is where we are able to sell premium on a contract that expires tomorrow. You could take it's a higher risk, high reward play and be able to pad another $50, $100 to it. But this is what we did. We did the Apple kind of like last week. I wanted to take advantage of where the market was. So we sold a Condor. And what this was pretty much an Iron Condor is literally just selling two credit spreads at the same time, one on the call side, one on the put side. So here's what we did. I sold a 222.50 call and bought a 225 call. So that one, we only got like $40 of credit for that. And then we sold a 217.15 put and then bought a 215 put. So pretty much my max risk on either one of these is $250 loss, but we collected 111. Someone said, is your max risk 500? No, because if one of these loses, if it goes up past the put, I'll make money on the calls. If it goes past down the other one, I'll make money on the put. So we got $111 credit. The max difference between any of these strikes is $250. The max loss on this play is about $149. And here's our break even. So if Apple closes by Friday at 223.61, we don't lose money. Anything above that, we lose money. If Apple goes below 216.39, we would lose money in that case. So I kind of like that because I think Apple could drop it maybe at the low, maybe hit 217 like it did last Friday. But if anything, it's been showing strength, so we'll see. But if anything, we also sold those other credit spreads on Apple, which even if we do lose on that, we could be pretty good. But I like that Apple one, that credit spread. Another play I did today. Well, actually, I want you guys actually all to pay attention to this one. I got a free trade, and I've done this before with Tilray, and I will make a video on this to kind of show you guys a little bit more in depth. But we made a Bank of America free. So I did close out of one of my spreads. You guys remember that in the money spread, I was up 60, 70%. I was up like 25 out of $38 credit. I just took it because it was expiring next week, and Bank of America is still pretty close. But this was a big drop on Bank of America, and the puts are good. So again, remember we were saying on the Fed, but what I wanted to show you guys with this play, this is from September 17th. This is what I said in the beginning of the video. I thought I'd put it there, but this was those same puts. We were up on the puts, and we closed out of those plays. But this is what I want to show you guys because we even bought another week or two later, we got another Bank of America put. If you guys remember this, I bought a solo $27 put. We bought it for 19 cents. Now you can see Bank of America's dropped a lot. So what did I do? I cut profits on that other play. I wanted to take it because just in case it bounced. And what I did here now, we bought this for 19. It's now worth 44 or something. So what I did was I went to the same day. I got the puts. You guys could see we own one of these 27s. That's the one we paid 19 cents for. And then I went down to here and I sold this for $22. And that is the 26 put I'm holding. So you guys could see here on the chart, this would have normally been a debit spread. We get the closer to the money, sell the further one. We bought the expensive one and sold the cheap one. But instead, since I bought this a few days ago and I'm up 100%, by selling this for 22 now, I got all of my money back that I paid for this plus $3 more. So I made over 10%. And now I could hold this play. Pretty much if Bank of America drops and goes to 26 or lower, I would make $100 on this, and that's it. It would cap our gain. But now I'm walking away with this play for free no matter what. I got paid to take this risk. So this is where I want you guys to be smart and understand how you could use these strategies and keep your eyes open. If you're in stuff and there is certain plays that go up, understand, well, what realistically, how much are you going to make and what are you risking in profits? In this case, I had $20 extra profit. I could either take the $40 or I could make sure I'm walking away with no less than $22. And then if it does go down, I'll make money. If not, nothing to boo-hoo about. So watch that. Another play we made, I did a Microsoft put spread, a simple one. This one had a very bad put credit to collateral ratio, but I did it when the market was, when Microsoft was really down. I want to say Microsoft was here and then it sold off again, but then eventually it bounced. But what did we do? I sold it for Friday. Again, I wanted some more of these Friday plays because the fact that the market's dropped heavy, if there is any bounce in the next day or two on certain more stable stocks, we could get some pretty easy credit. And that's why I did go with this play because the credit to collateral is awful. I only collected $25. It's a $100 max risk, so $75 total, but it was further out the money. That's still, the fact that for Microsoft to drop below 133 flat and even come down to 132 to get the max loss after collecting $25 in credit, it was pretty unlikely. That's why the credit was so small, but we got that. It bounced. It's up $24. This one's a small one, so I'm hoping that if there is a bounce, we could just get easy money, or I could hold this into Friday. Not too bad again. Just get some easy winners to pad the stats or allow us to do some other plays, and everything else we held. And then we had other stocks like Disney's kind of bounced back and everything. But other than that, we're still holding the rest of these plays. I'm going to be looking to make more plays. Again, Tesla dropped after hours. That's another one. Remember, we were down on those for $55. I said I wanted to sell some. I said this yesterday. I didn't sell them today, but those ended up bouncing. That's going to be a good one. So maybe even watch for selling Tesla puts tomorrow. Then actually the other plays too we made, those Home Depots. Remember I said these are going to be the play of the week. Those hit instantly. So if you sold them at the top, you could have made $220 on these. Some of them, the most of the ones that I'm holding, I sold for like 120 to 180, and I made about $100, $100 to $40 on them, depending on which one. I had 230s and 227s. That dropped, and you guys could see how that one actually played out. And then McDonald's, I closed this one for like 150 of the $180, so I left $30 on the table. I wanted to close it, and I might even sell a put on this one tomorrow. And lastly, those Anthems that we got, those have been good, and I like this one because both the puts and the calls that I've spread are surprisingly up. And again, watch how healthcare plays out during all this for any rotation. You can see how it's kind of holding there with the market still dropping, so it could even bounce. And then UVXY, I sold out of one of my debit spreads. I'm still holding a weekly on here, but I sold October 18th debit spread. I didn't really like how it was because I'm thinking after the next pop, if there is a bounce here and we do get a real reminiscent move of last October, it's not going to be pretty. It could be something where, yeah, there could be another one or two bops, then it comes back down, but it'll slowly go up, and it's going to be a very hard move to hit unless you really do get in the money. So we're going to have to see on those. But UVXY, if this one is prone to get very cheap, but it got expensive. And this is why I'm saying watch gold and SLV, because this was cheap yesterday. That's what we talked about. And now it's got expensive. So the next ones that's going to arrive, TLT is expensive too already. Be careful. But the next one to go is going to be gold and silver. So watch those. Watch Apple. Like we said, if that one comes down, watch FedEx. This is one I like. If transports do something, it held up a little bit better. And if it does start to move with the market, you guys will see. But this could even be a good one for selling puts, because if anything will bounce, you will probably see that in some of those stocks that got beat down most, and transports falls in that category. Then we got Shopify. Roku comes up as well too, but watch out. They ended up higher. I think if there is overall real weakness and we do see momentum sell off again, this could be one, but this one could even be a decent one to sell puts on as well too. Or if it does break through levels, if it does go back a little below 300, it could really start to sell off. Watch Disney. Now I'm down on all of these contracts and they're going to fluctuate. I'm still trying to hold it. I did a price check to see if we rolled over, and I might do that, but in general, I think Disney's good selling the puts on this one just because that's what I'm in now, and you could sell it for a lot more credit. But watch Disney, watch even Netflix. I know they did pretty decent as well, but how they're playing out is very interesting. Even reminds me of Starbucks, which is getting clobbered. And then Baidu and Baba, these stocks are up. So this is also very interesting. Watch how the China session trades today, but what these stocks do can be very, very decisive. And if these are a lagger when we do see volatility, go for Yang, but just watch how these plays out. If you guys see any good plays, call them out. Then Boeing. The tariffs for Europe are going to affect airlines. Eventually, the tariffs aren't a big deal. I probably should have said this earlier, but it's more on food. It's not going to be good for tensions. It will affect stuff, will affect Germany, who's already doing bad. And you guys remember how Germany's PMIs a few weeks ago affected us. So watch out for that. But if anything, the airlines, this could benefit Boeing with the tariffs. And then that we had that tariff on Airbus. So if that goes up and Boeing goes up, wouldn't be surprised to see a Dow component like Boeing lead the way or at least pad some of the decline tomorrow, if we do see that decline. But finally, watch TLT and XLF. It's the same story. Watch how TLT moves and if it does any bounces. And again, my play with these, watch XLF. You just watch how they inverse and go back and forth and wait till there's a big decay on some of these and then we go in for them. But the bonds are normal, and that's something you guys got to watch out for. This is one thing I wanted to talk about with what we're seeing and what's happening. Anytime there's been these massive volatility moments, it's really the dollar hitting high levels and then the sell-off of the dollar. So if the dollar keeps coming down, it's creating an effect where now everything else has to kind of balance out, and that's what we're seeing, and it's going to affect the currencies. It's going to affect rates, but bond rates aren't inverted, and they're not as bad as they were actually. So now it's dropping now. You might even see that play into tomorrow. We'll see. It wasn't dropping when I started this video. Maybe I talked too much, but other than that, keep your eye out for the yuan in the danger zone. Watch the effect with the dollar, but banks, bonds, then the gold and silver. But there is still other plays we're going to have to figure out to really take advantage of these rate expectations. So I'll leave it with that, you guys. That is your watch list. Make sure you guys post your watch list. Drop your thumbs up on the video. Make sure you're hydrated, happy, healthy, ready to go. And be smart, you guys. We got your back. Take it slow. Hopefully you're feeling good. Hopefully you've been making money and you feel a lot more confident. We've been here before. Do not let your emotions and hype get the best of you. Your FOMO, your imagination. Oh, I can make this much. I got to do this. Don't get over bearish. Don't get over anything. Honestly, the only way to play this is just leave your ego out of it. If you guys leave your ego out of this, enjoy the moment, understand if you make money, lose money. I'm not even saying this as a catchphrase. You're going to learn something. If you really enjoy this process, where you're at historically, what it means. This is the 1 year anniversary on the chat. We're going to have some fun. Just take it easy and don't put that pressure on yourself, and you will see the doors unlock. So don't try to catch a quick bag. I said it on an Instagram live. I get it. You guys got your YOLO demon. That's fine. Everybody has their YOLO demon, okay? There's nothing wrong about that. You need to understand the anatomy of your YOLO demon in your body, okay? You're growing up as a trader here. I get it. You have a YOLO demon, but it's not about caging the YOLO demon, okay? I'm not trying to say repress it and beat it down and, that way, because if you try to beat it down, it's just going to fight back even harder. You got to learn how to control it and keep it on a leash, and that's where learning these strategies, learning the spreads, mixing it in, and ultimately controlling your balances is going to help you. So I'm going to leave you guys with that. Keep it positive, respectful. I will see you in the morning. Let's go!